This is not going to be the typical video on this channel. This is going to be a reaction video on VirtualBacon's prediction about Ethereum. VirtualBacon is a very popular YouTuber, and he thinks that Ethereum can hit more than 10k, potentially 14k, according to his thumbnail. Now, I strongly disagree with the thesis, and I want to talk about the arguments that VirtualBacon is bringing and the counter arguments that might invalidate those arguments. The video is titled Ethereum will pump from now until June. Here is why. I don't think that Ethereum will pump. I do believe that Ethereum will continue to underperform Bitcoin. And I'm not going to watch the entire video. It's relatively long, but I want to talk about the most important arguments that VirtualBacon is bringing.
And I always believe that Ethereum will outperform Bitcoin and by a large margin. But why hasn't it happened? Why hasn't Ethereum moved with all the ETF hype and the altcoin movements? The key to understand is that Ethereum is an institutional driven asset. It is not meant for the retail audience. Most of the crypto native investors do not hold large amounts of Bitcoin or Ethereum because, simply put, they don't have the crazy multiples of upside anymore. However, for the institutions, they still have a large appetite for the only other crypto which they have access to, being Ethereum through the ETFs.
Now, is it really true that the large cryptocurrencies, mainly Bitcoin and Ethereum, is now mainly driven by the institutional investors through the ETFs and that they are now dictating the price action? I'm not so sure. Bitcoin has only 6% of its supply held within the ETFs. For Ethereum, it's even less. It's only 3% of the supply. It's quite a bit of a stretch to say that an asset is dominated by retail through the ETFs, when the vast majority, when 97% of the supply is not held through the ETFs. What I believe is really moving prices is the long-term holders. It's the early adopters. Maybe not the retail investors that bought last year, but the retail investors that bought 10 years ago. They are dictating the price. Have a look at this comparison, for example. This is Bitcoin's long-term holder supply change, so that's in blue, versus the ETF change. We can clearly see how the long-term holders take profit whenever Bitcoin peaks out and how they tend to buy at the bottom. We can also see how they've just recently taken profit again close to the 100k, how they stopped selling. And we can see how big that change is in supply relative to the ETFs. The ETF is here in green. So yes, having the ETFs is great. It does reduce supply, but it's not really moving the price. And so then VirtualBacon continues with that thesis, and he links the Ethereum outperformance to the money supply or to the balance sheet of the Federal Reserve.
This is the chart of Ethereum versus Bitcoin, their ratio, and this shows you how Ethereum is doing relative to Bitcoin, if it's overperforming or underperforming. And overlaid on top is this red line. This is the Federal Reserve's balance sheet. As you can see, back in February of 2018, when the Federal Reserve's balance sheet started to decrease, so did the Ethereum BTC ratio top out during this period. And you remember February 2018 was the top of the two bull markets ago. Then you have August 2019 when the Federal Reserve made their pivot to the opposite direction and started increasing their balance sheet and injecting liquidity. So did Ethereum versus Bitcoin ratio bottom out exactly in the same week. And then we had the extended bull market until the very end at around March to April 2022. This is when the Federal Reserve made their pivot yet again and started shrinking their balance sheet. And look at what happened to the ETH BTC ratio. It topped out right around these months. And since then, it has been consistently falling. Very simply put, the Federal Reserve's injection of liquidity directly benefits the risk on assets. And in crypto terms, right after Bitcoin, that gives you Ethereum. So during the next two FOMC meetings, if Jerome Powell and the Fed comes out and make this pivot announcement, we will for sure see the Federal Reserve's balance sheet start to bottom out and start to tick up again. And chances are the ETH BTC ratio will start to follow as well.
Isn't that an interesting thesis, right? Ethereum being mainly driven by the Federal Reserve balance sheet. I do have my doubts. We've already seen in the chart how there's some kind of cherry picking of the data, right? The Federal Reserve balance sheet is way less volatile than the Ethereum to Bitcoin ratio. But let's say, right, let's just for the sake of argument say that when there's more risk on appetite, when there's more money flowing into the system, that in theory, Ethereum should be outperforming Bitcoin. If that is really the case, which I already doubt, because I think the very risk on money will likely rather go further down the risk curve, right? It will rather buy Solana and Sui, etc. If you believe that there is indeed a connection between the Ethereum outperformance and Bitcoin, then we have to anticipate that the Fed balance sheet is going up, that interest rates are going down. But how much are they really likely going to go down? The market anticipates that rates will be somewhere at around 3.75 to 4% during most of next year. So a 50 basis point change. I'm not sure if that's really going to move the needle. The way I understand VirtualBacon's thesis is that interest rates should go way lower than that, and that would then justify an Ethereum outperformance. But if that's really the idea, why not simply buy a long-term government bond ETF like Zeros, right? Long-term government bond prices are inversely correlated to interest rate anticipation. In other words, when there is now a surprise rate decline, then long-term government bonds will go up in price. That's, I believe, the purest way to play that thesis, right? We don't have to buy Ethereum to bet on falling interest rates. Now, next we're talking about seasonality, as in the idea is that Ethereum tends to outperform Bitcoin in the first half of the year. And to a degree, I believe this is true. The question though is, how strong of an indicator is it? I'm not going to replay the video over here. I simply just want to share my part of the data, how I look at seasonality. Here is coinglass.com, and this shows the monthly returns of Bitcoin. And there's two ways to measure the performance of a month. We could look at the average return, or we could look at the median return. And we can see how the differences can be quite stark. For example, here in November, we had an average return of 46%, but a median return of only 10%. And the reason for this is outliers, right? The average simply just takes all of the data points and takes the average. The median takes the data point that's in the middle of the data set. Now, when there are big outliers, which we both have for Bitcoin and Ethereum in the very early days, when the market cap was still very, very small, where we've got these big outliers with all of that volatility, then the real potential representative data point gets skewed. So have a look at this, right? Why do we have this 36% delta? It's because in 2013, Bitcoin in November made plus 449%. This is not representative of what could happen today. Thus, I believe a better approximation for seasonality would be the median return. It shows us a bit more of a realistic picture and it doesn't skew the data that much. And so we have this for Bitcoin and we also have this for Ethereum. And so let's now compare those median returns. So Bitcoin at the top, Ethereum at the bottom. And here color coded, we see simply the difference between those two numbers. This is all somewhat of an approximation, so we can remove what seems to be precision in the data because there is no such precision. And yes, January tends to be very strong for Ethereum, historically speaking. February tended to be not as good. And then we had 3 months, March, April, and May, where Ethereum tended to do better. And then the rest of the year, it didn't do that great. Now, how well does this indicator work? How great was January of this year, for example? The answer is, unfortunately, it didn't work that well, right? Ethereum underperformed Bitcoin by 9% in January of 2025, even though this is historically the strongest month for ETH. And so I don't really believe in seasonality. I don't believe in things like sell in May and go in May, right? This is a very popular saying in the stock market. I don't think this works because markets are more efficient than that. The next argument for a potential rally of Ethereum is politics. Now, I'm not sure if Trump is really supporting Ethereum alone. Yes, Trump launched some NFTs on Ethereum, and yes, World Liberty Finance does have some positions in Ethereum DeFi, simply because decentralized finance is mainly focused still on Ethereum. But the Memecoin launch, for example, was on Solana. I believe Trump's approach to crypto is simply just to support the industry, to get some votes, to stay in power, and to get some public support. I don't think that his mental focus is on crypto, right? His mental focus is on way bigger topics, on tariffs, on international relationships, etc. The NFT launch and the Memecoin launch, it was probably all simply just a money grab, similar to how Trump stakes was a money grab, right? Trump is not necessarily the best expert on stakes, but he simply just launched that brand experiment, hoping to make some money. At that point, it didn't work. With the Memecoin launch, of course, he did make some money. And so I don't want to get too much into the details of this argument. Yes, Trump is supporting crypto. Yes, the SEC changes are positive for crypto, but they're not necessarily positive for Ethereum in particular. The whole real world asset narrative, the whole DeFi narrative, it can very quickly shift to other chains. This doesn't have to be all just Ethereum. Now here's the part of the video where I've got the strongest disagreement, and that's the ETF flows. I do not believe that the Ethereum ETF will support the Ethereum price more than it will support Bitcoin. There's a strong disagreement that I have with VirtualBacon in the following section of this video.
Finally, the last catalyst on this list is the Ethereum ETF inflows. How much of it is actually coming in, and does it actually matter? Many traders will say Ethereum's price has not moved since the ETFs were approved and launched in the summer. And to that I say you are right up until November of this year, but since then the ETFs have started to have inflows and we are starting to see Ethereum making its price reversal, especially against Bitcoin. The best place to track this is on this website called So Value. You can compare all the daily inflows and outflows on the spot ETFs for Ethereum and Bitcoin. So first is this chart zoomed in where we have the total inflow and outflows since the Ethereum ETF has launched. And you see from July 22nd up until November 7th, the Ethereum spot ETF actually had a net negative. You can observe that with this white line here. You see total net assets started at 10 billion, but by the time of October, it actually dropped down to 6.4 billion. And that was heavily correlated with Ethereum's price movement. It dropped as well. But look at this pivotal point here, starting from November 5th, when the ETFs started to come in and we have net positive inflow. From November 4th until today, January 6th, we had a growth of around $6 billion of net inflow assets. And the first important thing to note is that the heavy correlation it has with price. Whenever the ETF inflow is positive, price moved up, and the ETF inflow is negative, the price moved down. We have already talked about how Trump's election win triggered this ETF inflow to start, and his inauguration is likely to speed this up as well.
Now, I think this can be misunderstood very, very easily, because when we look at the assets under management for the Ethereum ETF versus the Ethereum price, of course there is correlation because the ETF holds Ethereum, right? When Ethereum's price gets cut in half, then automatically the AUM gets cut in half as well. So seeing the white and the blue line moving in sync is completely understandable, right? This is supposed to happen. Now we do see a decoupling. We do now see how the AUM is outgrowing this blue line. So there are inflows, obviously, but the high correlation between those two lines is not necessarily just due to the ETF. We see a very similar chart for Bitcoin, right? Again, the two lines move very much in sync, and then the AUM for the Bitcoin ETF tends to outgrow just the Bitcoin price. Here's a different representation of the same data. Again, the assets under management for the Bitcoin ETF. So that's its dotted line versus the Bitcoin price. They move in sync. But here we've got the Bitcoin ETF assets under management measured in Bitcoin, not measured in US dollars. And this does not move that much in sync, right? There's way less volatility here because the AUM measured in Bitcoin is really just impacted by how many people buy and sell the ETF, not by the Bitcoin price itself. And then VirtualBacon compares those inflows, right? We see inflows in the ETH ETF and in the Bitcoin ETF, and the delta between those two flows should then also dictate the delta in the price, at least in terms of the ETF inflows, right? The other impacts of other factors we'll talk about later in this video.
Will this actually matter? Why is Ethereum still trading below its previous all-time high, unlike on Bitcoin? Taking a quick look on the chart, you see that starting from November 5th and November 6th, when the Ethereum ETF inflows start to get positive, the ETH versus BTC chart already started to go sideways of a trend instead of following the previous downtrend. This is already good to see. And looking at the actual flow numbers, since we had a $6 billion of net inflow over the past 2 months, we can look at how much of the total supply of Ethereum has been picked up by the ETFs. So $6 billion over 2 months is $3 billion per month of inflow. The current market cap of Ethereum is $395 billion. So here's the math. You take 3 billion divided by 396 billion. That gives you 0.76% of Ethereum's total supply that is coming in to the spot ETF per month. Now let's compare that with the inflows of Bitcoin. Although Bitcoin has had a much bigger net asset in management, it only accounts for around 5.7% of the total market cap. This is because Bitcoin is a bigger asset. So looking at the net flow of Bitcoin, it started at $28 billion since launch, and currently it sits at $110 billion. That is a total of $81 billion over the past year or 12 months. So let's do the math again. We have 81 billion divided by 12. That gives us $6.75 billion of inflow on average coming into Bitcoin per month. We take that and we divide it by the market cap of Bitcoin coming in at $1,865 billion. This gives us 0.36% of Bitcoin's total supply that is being bought up by the spot ETF per month. So now we can compare these two numbers and you see the real demand here. Although the net inflow is obviously much smaller on the Ethereum side versus Bitcoin, the percentage of supply is way different.
Can you guess why I disagree with this analysis here? The reason is we are comparing two completely different timeframes. We compare 1 year for Bitcoin versus very bullish months, just the last 2 months for Ethereum. We have to compare apples to apples. We have to compare similar timeframes. And once we do this, I don't think the numbers look that great for ETH. So let's take the earliest data point on source of value, the same website that VirtualBacon is using. So the chart for Ethereum here starts on the 5th of August. And the same is true for this Bitcoin chart. Here's the comparison. The 5th of August to today. This is the asset under management for Ethereum in US dollars at that point to today. We've also got the comparison of the prices. Thus, we see how much the Ethereum asset under management measured in Ethereum went up. So it's roughly 1 million ETH that got scooped up during that time, or 0.8% of the supply. Now let's annualize this. This brings us to a supply absorption of 1.6%. Now let's compare this with Bitcoin's asset under management that went from 48 billion to 119 billion. The Bitcoin price also almost doubled. The number of Bitcoin that got scooped up is roughly 300,000, a bit less than that. Bitcoin supply is a bit under 2 million. So we've seen over the same time period a Bitcoin supply absorption of 1.4% or 2.8% annualized. So this number here for Bitcoin is higher than this number for Ethereum. There's more Bitcoin demand, even relatively speaking, than for Ethereum. Now we can look at different data points. Let's take the beginning since the Bitcoin ETF existence. So that's on the 10th of January. So this is when then also Grayscale was able to convert their trust into an ETF. And when we take that number, that's 2.76% annualized. So very similar to what we see in this recent time frame. So it seems like the 5th of August to today seems to be somewhat of a representative data set where Ethereum unfortunately underperformed. Here's, by the way, the assets under management for Ethereum over time since launch. So at the beginning there was outflows. So that was the Grayscale Bitcoin Trust selling off and not enough demand for those new ETFs. And now that is slowing down again, right? We do have positive inflows both for Ethereum and for Bitcoin, but I believe the Bitcoin inflows are quicker. But again, I don't believe that it's the ETFs that are moving the price, right? There's only between 6% for Bitcoin and 3% for Ethereum of the entire supply that's actually held by the ETFs. I believe it's the long-term holders that make the difference. And here we've looked at this already for Bitcoin. But here's the unfortunate truth for Ethereum. Ethereum had this move from proof of work to proof of stake. And at the beginning, there was quite a bit of excitement around this. There was so much usage of Ethereum that Ethereum supply went down. Because when you now use Ethereum, you're effectively burning ETH, you're taking it out of circulation. But at the same time, the stakers still need to get rewarded. So if there's not enough usage of Ethereum, then the supply is going up. This is what happened since April of last year. So roughly, how many more Ethereum entered the market? We went from 120 million and 60,000 to 120 million and 520. So roughly 460,000 new ETH in the span of 10 months, or 46k Ethereum per month that the supply expanded. And when we look at how much did the ETFs absorb over the course of 6 months, and the answer is 161k. So roughly 1/4 of the ETF demand is already getting absorbed through the supply expansion, right? The supply expands that quickly that 1/4 of the ETF demand gets completely neutralized. Now here's the difference to Bitcoin. Bitcoin has found its niche. Bitcoin is the store of value, the better gold, the asset to simply hold to protect against inflation. Now, Ethereum doesn't really have that story, right? Ethereum is very clunky, it's very expensive to use, it's very slow for final settlement, it's not really good for speculation, it's also not that great as a store of value because the supply is now even after the merge expanding. And so we can see that there is more and more Bitcoin, relatively speaking, even after the mining, that either gets lost or that's held by wallets that simply never sell. Roughly 30% of Bitcoin's supply hasn't moved for the last 5 years. Now, if we add the wallets that have moved between 5 to 3 years, we do see some cyclicality, as in when the Bitcoin price is very, very high, when it skyrockets, then those people might take some profit. But even with the recent bull runs, we haven't really seen that anymore. It seems like if you regard 3 years as a long-term holding in the crypto space, then half of Bitcoin hasn't moved, with the tendency of this going up. So the liquid supply of Bitcoin is clearly shrinking. I'm not sure if the same can be said for Ethereum. I believe that the move from proof of work to proof of stake for Ethereum was a mistake. Because before we had all of those stakeholders involved in Ethereum, right? People were mining Ethereum, they were converting energy into Ethereum, and thus they automatically became Ethereum holders and they got interested in Ethereum and its whole ecosystem. Now, without all of that, right? Without all of the miners, Ethereum tends to underperform Bitcoin. What we see over here is the switch from proof of work to proof of stake. And since then, Ethereum underperformed Bitcoin by 63%. And I'm not saying that we can't outperform in Ethereum over the next 2-3 months. Who knows how well the seasonality indicator will work. And we are currently extremely depressed in Ethereum. But what I am saying is that long term, over the next months and years, we're likely going to go further down. This is more a view on the long term, not necessarily on what's going to happen tomorrow or in 1 month from now. Now, here is what I believe will break Ethereum's back. And that's the staking. Now, staking is an artificial mechanism to remove liquid supply, right? When you buy Ethereum and you stake the Ethereum in order to get more ETH back later in the future, what you're basically doing is you're removing the liquid supply from the market, you're artificially holding it to then get more supply in the future. But at some point you do want to sell, right? At some point you want to liquidate. And the market as a whole seems to now have seen its saturation point. This is the staked Ethereum, and it peaked at a bit under 35 million. Long-term believers in Ethereum stop believing now in aggregate. This is not yet crashing down, but we've clearly seen the reversal in the trend. If you're going to see the unstaking at the same pace as we've seen the staking, then all of the discussions around Ethereum's ETFs, etc. will be completely irrelevant. This chart starts in November of 2020. So we've got a bit less than 4.5 years, and we got 35 million ETH staked during this 4.5 years. So that's 7.7 million per year. Dividing this by 12 is 650,000 Ethereum that would hit the market in case this chart simply just gets mirrored and we're going to go down at the same pace as we went up. 350k per month. Again, how big is that? It's 10 times the supply expansion, and it's 3 times the pace at which the ETFs bought Ethereum. And that was during a time where things were very, very bullish. Take a look at the Bitcoin ETF supply over time, right? This went up since Trump's inauguration. And when we are not that bullish, then probably the Ethereum ETF inflows will also slow down. And we'll see even less than those historical 161k. So unstaking of ETH can really break the neck for Ethereum, and unfortunately also for a lot of altcoins. Now, I'm not making this video because I want Ethereum to go down. I'm making this video for the people that have got some money on the sides and that are considering, should I buy Bitcoin or Ethereum with it? I think the better choice is Bitcoin. The issue with Ethereum going down is that a lot of altcoins are highly coupled with ETH. Now, there are technical reasons for this, right? There is the binding in liquidity pools, and and there's all of the DeFi total value locked, etc. But the main gist is the correlation coefficient of altcoins relative to Ethereum tends to be higher than of altcoins relative to Bitcoin. And that means when Ethereum crashes, the altcoins go with it, not necessarily Bitcoin that much. But if you're holding Polkadot or you're holding Cardano and Ethereum is crashing, then very likely those assets will crash as well. Now, I'm not making this video in order to throw shade on VirtualBacon. I actually like his content quite a bit. We're all just trying to make the best out of the data sets that we have. We try to interpret them as well as possible. And this is simply just the start, hopefully, of a productive discussion. Maybe VirtualBacon is going to watch this video as well. Maybe this opens up the opportunity to have some kind of a Zoom talk. It would probably make for some good content. Until then, of course, if it's your very first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.